was trying to be cool. So I think I've had an account for like 4 or 5 years and I didn't do anything with it. I had like maybe 100 engagers because I didn't care about it. Thank you for the heart me. My auntie, my favorite four journeys, she knew what I was doing on another platform. And she said, Joel, this platform is ripe for what you do. You know, we're looking, TikTok is looking for live hosts that has quality content. You need to be doing your thing on this platform. 1 week later, I said, all right, I'll go ahead and change my account because my account wasn't about the stock market. It was just fun little things that I was doing with my kids. And I hadn't posted on it in like 4 years. So I deleted all of that stuff and I started out November the 1st. So I joined 1 week after she told me, not joined, I opened up my account 1 week later. I had to go find my passcode. And then 1 week after that, it was November. And I started the 30-day challenge. Thank you for the crown. The first 30-day challenge, most people didn't know who I was. I only had 100 engagers. I came in and I was humble because I do have a huge following on another platform, but I came in with nothing, right? And it's cool to come in humbled because, you know, you see how people treat you. They're like, we don't know who you are. I'm not going to engage with you. I'm not going to support you. You know, you got to support me first and this, that, and the other. And you got to put in your time. And I got to come by and see what you're talking about before I decide if I'm going to even allow you to come up on a panel and talk about finances because we don't know anything about you, Joel. You could be a scammer. You could be like all these other educators. And I sat back and I said, all right. All right. You know what I'm saying? I'll be humble and I'll just sit back and do my thing. So all I did was I said, all right, for the next 30 days, I'm going to teach beginners how to go from not knowing anything about a stock to being the best stock market master in their family. Within the first week, people were inboxing me like, oh my God, like I've learned so much about the market in this week that I've had in 10 years. And I kept hearing that over and over and over and over again. So I said, all right, after the first 30 days of the Millionaire Challenge, which at that time, it wasn't even the Millionaire Challenge. It was working our way up to the Millionaire Challenge. But I had to get you guys into a millionaire mindset. And just like anything else, I had to prove myself to everyone. I said, all right, I don't worry about proving myself because once I get in and once I show you guys, certain things, and once I start calling this trade or calling that trade or buying this and everybody watching and seeing what it does and performing my magic shows at night, I slowly start to build confidence in the people that are coming to the room. And I expect you guys to do that. I came in humble and I made sure I did my part. All right. Give quality education. Talk about the things that you know, lean in on your strengths, and everything else will work out. So then the next month, December to December 31st, I did a 30-day challenge to take intermediate traders from intermediate where you can go on Yahoo Finance, you can look and see what's going on with the market, you can analyze a stock in 1 minute. But by the end of those 30 days, not only will you be able to be the stock market master in your family, but you're now going to understand options and you're going to understand futures market and you're going to be able to actually talk the language. Now, I strategically, it's interesting that strategically, I've always done education towards the end of the year. It just makes a lot of sense because I golf from March until about October. And then there's downtime. And I love it because once golf season ends, I can get into football and I can watch football for the next 3 or 4 months and I can do my education thing, right? And then it's just the same thing, rinse and repeat every single solitary year. But most people didn't know that was my rotation here on TikTok. So I wasn't going to do a 30-day challenge from January to January 31st, but I kept getting feedback for the people that missed me in the beginning. They were like, Joel, when you first came in, nobody knew who the heck you were, dude. So you got to give everyone that's a beginner a chance to maybe catch up. So I said, all right, I'll go ahead and do a January 1st to January 31st. The Millionaire Challenge started on the 1st, but I'm still going to do a beginner's challenge. It's going to be a little bit faster, though. It's going to incorporate some of the intermediate stuff towards the end, but I'm going to go slow in the beginning. Now, me doing that, I had to say to myself, Joel, as a day trader and as an investor in the market, you're probably going to miss out on some trades because usually in November or December, I'm not really trading. I'm usually doing a lot more education, and I wait for the first of the month to come so that I can take advantage of the volatility. So, my family is like, all right, we're going to support what you're doing, but you missing out on these silver trades and these gold trades and all of these Millionaire Challenge trades you showing on a daily basis. You're missing out trying to give out this education on this particular platform. So I hope that you guys understand the sacrifice that I have to go through to make sure that you guys get this quality education, because I wasn't going to even do the January 1st to January 30th. So then as I'm on TikTok, I'm trying to learn different ways to help everyone. I'm trying to figure out how I can be in multiple places at one time and still be able to do my thing, which is trading and investing, because that's priority number one. So I created the group. I learned about the super fans came out at the perfect time. So, as a Superfan member, you're going to have access to the group. Even in the group today, I told everyone when I was buying silver at the lows of the day. So even as you guys are day trading, I caught silver right around $70 or $71 earlier today and rode it all the way up to about 78. And I think we closed at about 77. So for you day traders, you could have caught a really, really nice trade just being in the room. And it's funny because a lot of people are like expecting there to be just constant, I'm buying this and I'm buying that. That's not how real day traders that are trading the market, we're so focused. We're not like all over the place trading everything and anything for 4 hours. We get in, we see a trade, we try to be in it for about an hour and then we're out. But this whole thing isn't about, day trading, all right? And I've always tried to explain that to you guys. There's 3 different ways that I'm introducing the Millionaire Challenge. The Millionaire Challenge isn't about making, $1,000 go to $1 million in 10 trades. That's just my personal goal. The Millionaire Challenge has always been set up where you can get there short term, medium, and long term. It's always been set up that way. The problem is most of you guys only come into the stock market and you choose one of the 3. You're like, eeny, meeny, miny, mo. Because I only got time, Joel, to focus on one of them. Right? And I have been telling you guys to do all 3. Because most businesses are set up that way. If you're in the real estate game, you're thinking short term, medium term, long term. If I'm in the restaurant business, I'm thinking about what my restaurant can do in the long run, but how can I make money short term? A lot of restaurants folded when COVID happened because they didn't have any type of delivery service. They weren't able to capitalize on the short term gains. And it was so simple. It was like, all you need is a carrier. You got people that will come to your restaurant, take your food somewhere else. But some people were so stubborn. They were like, no, I got high quality food. I don't trust anybody taking my food to anybody else. And then their restaurant folded because of that mindset. You got to be able to take advantage of short-term gains, medium-term gains, 1 to 10 years, and you should already be set up for long-term. And no matter how much we hate or one is more boring than the other or one is just too complicated than the other, if you learn all 3, you're going to be okay, because you never know when one of them are going to hit. You just don't. And we think that we understand that when we come into this game. We come into this game thinking, if I put my money into Apple, it better give me this amount of money in this amount of time. That's not how the market works. The market has ebbs and flows. You got to be patient. You got to be positioned correctly, but you got to be patient. You can't put all your eggs in one basket. You can put all of your eggs in one basket, but percent wise, it's just not wise to have everything in one thing. You might luck up. You only got to get rich one time. But most of us don't have that particular luxury. So I've been teaching all three all the time. I don't put weight on either or. Every day I'm talking long-term, short-term, medium. Every day I'm doing consultations with people talking about long-term, short-term, and medium. It's up to you to decide if you're going to set yourself up this way. It's not all or nothing. As humans, we always come into this game thinking all or nothing. It's either super conservative or super aggressive. There is an in-between. In-between is usually the right answer. It's either Republicans or Democrats. It's either hell or heaven. It's either I'm bullish or I'm bearish. All right, but there's middle ground. You guys should be concentrating on all three, and the middle ground is where you really need to start putting a whole bunch of attention into the market. So let's talk about all three again, right? The Millionaire Challenge is set up three ways. I want you guys to focus on getting to 1 million all three ways, because some of us, let's just be honest, one way you're actually not going to get there that way. But if I got three going for me, I'm going to get there. Or not me, but you're going to get there. All right. So let's talk about them. We all know the story of the tortoise, and we all know the story of the hare. And what's interesting about the story is it's funny because they make it seem like the tortoise, there's something wrong. I mean, the hare, there's something wrong with making like doing things really, really quickly. I like the story, but I don't like the story, because the story is always talking about, the moral of the story is that, be patient and, and you'll finally get there, right? Where the hare is just wants it all now. And there's nothing wrong with that. I'm a believer that you should have both personalities, right? I don't believe one over the other. I just believe you should be doing both. When I was training as a swimmer, oh my God, we hated swim practice. There was no swim practice that a sprinter or a distance swimmer didn't like. Why is that? Because every swim practice, we had to do sprints, which I love. When it was time to sprint, I whooped everybody's butt. But then when we had to do distance, I got my butt kicked. And I never understood it. I was like, why am I doing this distance stuff? I'm a sprinter. Why do I need to swim 20 laps when all I'm concentrating on is one lap? Because those 20 laps is going to give you the core strength that you need to become faster as a sprinter. And then the long distance swimmers are pissed off. They're like, why do we need to do sprints? Right? They're learning turnover. They're learning how to get their arms to go faster. They're learning how to beat at a higher pace so that when they're doing that long distance swimming, those, if you're doing a 16 beat kick and you go down to an 8 beat, it's not as hard. If you incorporate all of it, you're going to be okay. And no one ever understands that except the coach. Nobody understands that but the coach. The coach gets so much flack from everybody. And in the end, you need a little bit of all of it so that you can understand the sport. It's the same thing when it comes to wealth and building your positions. All right. So let's talk about it. Let's talk about what most people don't want to talk about. Let's talk about the most boring way, the tortoise. right? The tortoise. Each and every single one of us are pretty much millionaires if you have these things set up. You're already a millionaire. You just need time to get you there. If you're working corporate, you should have a 401k. If you don't have a 401k, you should be setting up some type of retirement account that you can do on your own. Guys, you could have set your account up yesterday if you wanted to. If you were to go to Charles Schwab or go to Fidelity and ask about their IRAs, if you don't already have one, you can set one up and start investing in yourself. If you own real estate, you're already on that path, right? Even if you purchased a $200,000 house in 20 or 30 years, it's going to get you close to that million. It should be doubling every 7 to 10 years because real estate's been averaging about 8 to 10% a year. So about every 7 to 10 years, your real estate should be doubling. So you're already going to get there. If you have life insurance policies, your life insurance policies, when you go, everyone should have $1 million policies. Whatever it costs to have that $1 million policy, pay it. So that when you leave this particular earth, you're leaving a fortune for your family, your loved ones. You're already a millionaire if you get into that millionaire mindset and you just have these things set up. And then this is just going to take care of itself for you. You don't even have to do nothing but continue to go to work. Okay? Set up those trust funds. If you don't know how to set up a trust fund, hire someone to help you do it. I couldn't stand talking, Mike, it bores me to death talking about life insurance policies. Ugh. Get me out the room. I'm like, do I have to make it to this meeting? Can't you just go there and just sign for me? Like, whatever. I don't even want to talk about it. And I'm sorry for those that sell life insurance policies. I'm just being honest. I don't want to be there to talk about it. Health insurance. Y'all should not be out here raw dogging the world with no health insurance, as if you ain't gonna break something or hurt yourself and need to go to the doctor. Especially if you over 40. That don't make no sense. You can fall out the bed and need something, tear your ACL, tear your MCL. You do that without health insurance, you're done. If you go to the hospital, you're done. You're like on those TV shows where they're like, I can't go to the hospital. If I go to the hospital, it's a wrap. Okay. So this is going to discourage a lot of the younger crowd. They're looking at this right now like, oh, they probably left the room. And a lot of the times, fortunately, the parents have already set their kids up in certain ways where they don't have to worry about this yet. Thank you for the heart, man. But you sit back and you wait. That should be covered. All right. Now, let's talk about the leatherback turtle way that most of you guys are not set up. This is how you get a 2,000% return in something. This is what, when you hear people talk about diamond hands and hodling, I love the younger generation because they've developed these words that became cool about holding cryptocurrency. Unfortunately, what sucks is that the youngsters have all their funds in crypto, not really diversified the way that they need to be. But they're if it's exciting them and they're buying and they're getting into the game, I'm all for it. But as you get older, youngsters, you got to start diversifying into some stock. All right. I'm already seeing you guys diversifying commodities, which is great. Silver and gold became meme stocks. A lot of cryptocurrency owners have started to buy, the commodities. Maybe it's because you're getting older. I don't know. But silver last week traded more than the NASDAQ. That is crazy. I don't know if it was I think it was the NASDAQ ETF. That's crazy. How did the silver ETF SLV trade more contracts than the NASDAQ? Well, I don't know if it was the NASDAQ. I think it was the QQQs, not the whole NASDAQ, but the QQQs. That's crazy. Which is probably why it dropped 40% today. This is when you pay yourself. See, if you have a 401k set up, you can't go there and try to spend those funds. I've seen people during COVID. I saw you guys trying to cash out your 401ks. And I'm happy that they were holding a lot of you guys off from doing it. They had all of these I remember people coming up to me, Joel, you can go into your 401k now and you can cash out like 50 or 60% of it. And I was like, nah, I'm good. You could protect yourself now by putting your Bitcoin in a retirement account, which is what I did because I'm ignorant. I know how I am. If that 100,000 was sitting in my Coinbase account, I'm already getting an itch to want a new car. I see 100 in there. I'm like, you got to protect yourself. So I made sure I put that crypto in an account. So now when I wake up, I think today, well, it's up now. But earlier today, I think Bitcoin was down $4,000. I didn't even care. Who cares? I can't cash it out for 20 years anyway. Protect yourself. Protect yourself. But this is the hardest to do because more than likely you are the manager of these accounts. These are the Robinhood accounts you set up. These are the Thinkorswim accounts you set up where you're buying Apple or Microsoft or Google, or even if you set up your own IRA, you're still managing those particular fund accounts. This is the hardest thing to do because it's up to you to pay yourself in those stocks over and over again and manage it through the emotional market that we're going through. It's the hardest. But this is where the wealth actually grows the fastest. See, your 401k, your real estate, all of the things that's in place so that 20 years down the line, you finally, get those millions. It's pretty safe. It's averaging, if you're invested correctly, you're probably earning anywhere from 8 to 10% a year. Remember what I said? The account's probably doubling every 7 to 10 years. But those accounts, more than likely, you can't buy Apple and Microsoft and Nvidia and all of these different companies. A lot of the time you have to do it on your own. So it's up to you guys to set up those accounts, and on the first of the month or whenever you get a check, you pay yourself 10% into those accounts. That's why yesterday I was showing you guys, I had to show it to you so that you can see it with your own eyes. Thank you for the level up. Who just leveled up? Yvonne? And thank you for the crown. This is the hardest thing to do because you have control over these funds. And then when life be lifing, a lot of the times we have to cash those funds out to take care of life's events. But you still should be doing it. You might go on a run where 5 or 10 years you don't touch those funds. And that's what you want. You want to get into the habit of paying yourself. And there's going to be a run. I know life feels like you're always paying somebody something all the time, but you're going to get a run. And sometimes all you need is 12 months for something that you've been putting funds in starts to run, like silver did. Right? And, you might be okay. And then maybe you can take those funds. You might not spend all of it, but this is the hardest thing to do. When you're doing the Millionaire Challenge where Joel or Christina or Yvonne or Denny Tyler or Sean is controlling, or Dasha or Sue or Ann Barrera or Krista or Glow With Me, when you guys are handling, or Raymond, when you're handling those accounts, you're the CEO of the fastest way to get there, in my opinion. For most of us, the fastest way is going to be the Indy 500 way. But even then, at some point, you got to come here, because once those accounts get to about 6 figures, it's hard to trade options with 6 figures. There's not enough liquidity out there. You're going to have to trade multiple options, or you're going to have to get into these stocks so that you can get these nice little 500, 600% runs so that you can finally get there. That 100,000 mark is a mark that you can get to. Each and every one of us in here. That 100 to 1 million, woo, that's hard. It's hard. 100,000, a lot of us will push till we get to 100. It's easy when it's in a retirement account. It's not easy when it's in your own personal account, because there's always something you can spend $100,000 on. Always. New roof, new car, vacation, tuition. Some friend needs a loan. Especially if you own a house. You can spend $100,000 on a house and people won't even notice the work that you did to it. It is hard to get from that 6 figures to $1 million. So you have to have all these other things in place. Because if you only have it here, it's going to get spent. But if you have 100 here, but then you look over into this account and you got 800,000 or 900,000, you might be like, oh, I'm good, because you feel like, oh, I'm good. I don't have to spend that money. I don't know. It's something psychological about that. That when you feel safe, when you have 90% of your assets safe, it allows you to move a lot easier and a lot better. You make better decisions. But this is the hardest. So when you're doing this Millionaire Challenge here, you're looking for, people don't understand what this is. You're looking for companies that can grow 10 times their value or more. This is strict. This is not about buying Coca-Cola, guys, and buying Heinz and buying Campbell Soup and buying General Mills. Unless you already got $300,000 or $400,000, why are you guys buying this? You already got an account that's safe. You're gonna have 2 conservative accounts? That don't make any sense. You go here so that you can actually try to make a silver play where your $30 silver goes to $130 in 8 or 9 months. And then you sell it. And then you take those assets and you put it into something that can grow 9 to 10 times their value. You guys are doing this backwards. Stop calling me about dividend stocks that you guys are managing on your own, and you already got a 401k that's being managed very conservatively. You have that thousandaire mindset that I need to be safe. If that's the case, just buy the S&P 500 and call it a day. And I'm not even trying to be funny or discourage you. Just buy the S&P 500 over and over again, and your work is complete. All you got to do is just continue to do it. You guys will start getting this later. And it always happens. I speak these truths, and then you come back 6 months, 12 months, and unfortunately 3 or 4 years later, and you're like, Joel, I get it now. 4 years went by just like this, and I didn't believe it could happen. And I didn't invest anything into myself. In fact, those companies, those dividend paying companies I was buying trying to be safe, they're down in value now. So I actually lost money over the last 4 years trying to play it safe. And I'm like, or what ends up happening is you never know that you're going to lose your job. You never know when you're going to lose your job. I didn't. Who knew that the biggest real estate financial crisis ever was going to come in 08, 09? I started my real estate career in 2003. It was dang near over in 2009. I had a 5-year run. Now, in those 5 years, I accumulated over 10 homes in a 5-year period. So I was a mover and shaker. But then it got all taken away. I didn't see that coming. No one saw that coming. I'm sitting at home, fortunately, with a little bit of cheese in my accounts. I can't do anything. I don't know how to make a dollar turn into another dollar. All I know is real estate. My clients can't buy real estate. So how am I gonna work when the people who I need to buy houses can't buy houses? You never know when you're going to lose your money. But you know what was around? The stock market. The stock market ain't never stopped. It ain't never go anywhere, which is interesting to me because a lot of you guys feel like it's going to go to zero one day. You're afraid of it. The stock market never closes. I mean, it closes at the end of the day, yes. But it never closed. It just kept doing its thing. And then I had to learn how to turn a dollar into a dollar. And I had to make mistakes and I had to lose money and I had to follow people who are know-it-alls that just want to be right and never showed any receipts. And then I spend time learning stuff that don't even freaking matter. But they doing all right. And they're not even investing in the market. Okay. I'm good, Raymond, because I haven't started actually showing charts yet. I'll put out the disclaimer, but thank you. So this, why we're spending a lot of time here, this is the hardest. Paying yourself first, buying things, and stop being afraid of the market. If you trying to get the bag. Because this is where you got to do it. You got to constantly buy things, and you got to constantly buy things even when the market is high, even when the market is low, because the market is rigged to go up. You have to have faith in it. Now, here's the thing. I want you to think about this. Maybe this will give you guys some comfort. Let's say you invest $100,000 over a certain amount of time in the market, right? And let's say the market plummets. Let's say you have a 1929 event. I want you to think about this. Let's say you have $100 and something thousand invested in the market, and we get a 1929 event. That means your $100,000 might be worth, I don't know, let's just say $40,000. But you know what else is going to happen? If you have a 1929 event, that means real estate's going to drop, stocks are going to drop, food prices are going to drop, everything's going to drop. So your 40,000 is actually probably going to be worth more than the 100,000 that it was when you were at the highs. Now you can take that 40,000 and go buy you some real estate with it. You can go buy some stocks at their lows. And then probably 3 or 4 years later, you would make a gazillion dollars. I say a gazillion dollars, but you'll make a fortune. See, you guys don't think that way. You think, what if I lose it all? What if the market drops? If the market drops, the value of everything drops. Your job is to be invested so that you don't miss out on the moves. If it goes down, you have powder to buy something. I know I say who cares that it's worth less, but that's your mindset. You're not thinking like a millionaire. You're thinking like a thousandaire that's afraid to lose. You have to invest in yourself constantly if you're trying to get this. You just have to. There's no other way to say it. And you have to find things that have growth potential unless you're already working with six figures. If you're trying to make 10 times, 100 times the value of your portfolio, you can't sit around in companies that only go up 2 or 3% a year because you're afraid to lose it. Now, I'm not telling you guys to go out there and buy speculative companies. You got to do a little bit of work. But a lot of the times you can just go on ChatGPT, be like, yo, what are the top 20 companies in market cap? You can start there. And when they're on sale, you're constantly buying them. All right. Then you have the good old millionaire challenge, what everybody wants to do. Joel, I want to do what you do. This looks so fun. Bump all that other crap. Let's just do this 2 or 3 times. Then I ain't got to work no more. You got to work your way up here. You got to psychologically work your way up here. You got to work your way to being able to drive a race car on a racetrack. I tell this story all the time. One of the best gifts that I ever received from my wife was a chance to go to Atlanta Speedway and race a real stock car around the track, 8 laps. We went and took a 1-hour class. That's all it was. Hold up, Joel. You took a 1-hour class and they put you in a real stock car and you drove it around a track over 140 miles an hour? I'm like, yeah. 1 hour. I can teach you guys options in 1 hour. It sure don't mean that you are now a super trader. Yes, I got on that track and I drove that race car. There was no other cars on the road. Actually, yes, there were. They were just further up, but there were other cars. Like if cars in front of me had gotten into a crash and I was on that track, I was going to have to weave around them. I forgot about that. There were multiple cars on the track, but they had us, I don't know, maybe they had us maybe 200 yards, maybe more apart. I don't know how big an actual track is. Maybe it was more than that. Maybe it was 400. I don't know. But what was interesting was that in 1 hour, they trusted individuals to come on the track, and there was no teacher in my car. Just me. I loved it. One of the best gifts I've ever received. Now, a lot of you guys think because we're going to take options next week that you're going to be able to just get on the track and just be able to do your thing and trade with people like myself. You will be. And you might win here and you might lose some here, but you still have to practice. You still got to go through the motions. You still have to know what you're doing. All right. This is fun, but there's risk to reward that's involved. There's a lot that's involved when you're trading the Indy 500 of trading. I show you guys the Millionaire Challenge trade of the day, not to scare you, but to show you, hey, I wouldn't have known that you can drive 140 miles an hour on a track if I didn't see average people doing it. And I was like, oh, shoot, there's nothing for me to be afraid of. I just got to understand some rules, and then when I get on the track, I just drive it like I normally drive a regular car, it's just faster. And you had to know how to drive a stick. I don't want to get into it. I had a friend that was out there, rest in peace, he's no longer here, that went out there and didn't know how to drive a stick and didn't tell anybody and dang near killed everybody that was out there. All right, so before I get into the teaching, let me give my disclaimer at the 1 hour mark. If you don't know who I am, my name is Joel Harrison. Happy Friday, everyone. My name is Joel Harrison. I'm an expert in stocks, options, futures, and cryptocurrency. A lot of people know me and follow me because of my transparency. These are receipt towers. So if you ever have to ask about receipts, I have no problems telling people about some of the gains, some of my best trades that I've taken, my portfolio over the years. I manage my family's financial portfolios. Just about everybody in my family, I manage those funds. So, that's my resume. But I have over 30,000 hours of trading and investing experience in over 10 years. And anything that I talk about today are the opinions of Joel Harrison. All right. They are the opinions of Joel Harrison. And for the last 100 days, I've been giving you guys free education. Thank you for the crown. I'm going to have to change that because I don't really like how that looks. All right. But I appreciate the gift. All right. But anything that I talk about today are the opinions of Joel Harrison. Opinions. All right. So let's get to it. What I'm going to do is for the next hour, I'm going to look at your stocks, but we're going to break them down. We're going to break it down into how would I use the Millionaire Challenge for an investment? What do I actually look for? What do I actually look for a day trade? What do I actually look for when I'm swing trading? So that you guys can get some types of numbers, right? Now, tomorrow, I believe I said I wasn't going to go live tomorrow. I may be going live tomorrow. Tomorrow, I probably will get more into risk to reward if I go live. If not, sorry, there will be a Superfan live on Sunday. I haven't decided what time yet. Probably, I probably will do it at maybe 4 o'clock. All right. So, that is out there, but you guys got to practice. You got to practice what you're doing. You got to practice it. And I have to practice what I preach. You guys should be out there practicing all three at the same time, even if you don't want to. All right. And there are a lot of platforms that you can go to where you can practice. On the Thinkorswim platform, guys, on the Thinkorswim platform, there is on the Thinkorswim platform on the Thinkorswim platform, there's a tab that you can click and you can have a virtual account. And a virtual account is going to allow you to trade the market with fake funds or, funds that are, you can trade up to about $200,000 in the market. You can use your strategy where you're buying Apple. You can buy Apple options if you want to. You can trade the Forex market, the futures market, but you can practice while you're there. All right. So let's get to the Millionaire Challenge trade of the day just to get started. All right. Silver was the Millionaire Challenge trade of the day. Now, what I want you guys to do, yes, it's called paper trading. And Barrera is correct. It's called paper trading. What I want you guys to do is let me know in the comment section who's still holding silver. I just got back in silver today. All right. I had a whole bunch of silver. I sold a lot of that silver. I was mad when I saw it run to $113. I'm right back in. I got in today right around the low 70 area. So if you're in silver, all right, great. Now, If you bought silver, if you're honest enough with yourself, who in here actually bought silver $100 or higher? And if you were buying it $100 or higher, were you buying it as a trade or as an investment? Because if you bought it as an investment, I'm not going to bite your head off. If you bought it as a trade, let me know. I want you guys to start being honest with yourself, because the sooner we're able to be honest with ourselves, the faster we're going to become better traders and investors. Okay, 73 is not a bad entry, in my opinion. Okay, you bought it as an investment. Okay. Lisa, you bought it over $100? When you bought it over $100, were you buying it because of the fear of missing out? Or were you buying it as an investment? Because if you're buying it as an investment, guys, you can always dollar cost average. Oh, you bought it at 70? So a lot of us got in today. Look, congratulations. A lot of us bought silver today in the 70 range. Now, here's the thing. As an investor, I don't care if silver goes to 50. I'm actually expecting it to go to 50. Now, why am I expecting it to go to 50? Because if you're using the what would Joe do method, the what would Joe do method states that any asset, I don't care if it's crypto, I don't care if it's stock, I don't care what it is, I don't care if it's a commodity, I don't care what it is. If it's something that humans can buy, if that bad boy grows more than 100%, in less than a year, it's not if it's going to drop 50%, it's when. This move to the downside was expected. I've been sitting back every day mad, but I've been patient. And here's the thing, it didn't quite drop 50%, but it dropped so much I had to buy some. It was down 40% at one point. And I missed it when it hit. Guys, it went to 69 for a second. And I was like, oh my God. And I didn't grab it. But I got the alert. That's how I even knew to buy it. I was sitting on my couch on TikTok streaming. I was in somebody's live and I got an alert. And I was like, oh, shoot. I thought it was a joke. I looked down. I said, silver's at 69, man. Get out of here. I didn't believe it. I turned on the TV. That was like, silver, oh my God, the world's coming to an end. Silver, silver, silver. Ah. So I immediately bought some. And then I went into the room and I said, hey guys, I couldn't tell you guys before I bought it, but I just bought a whole gang of silver because I'm transparent like that. Even if silver goes to 20, I don't care. I have so many receipts, guys. I can be wrong for the next 3 years and it won't matter. It won't even matter. I got so many receipts, guys. I can just live off of my receipts from here on out. Because for 10 years, I've been showing receipts. I don't care what happens in the next year. I don't care. I care, but I don't care. So let's talk about silver. Let's talk about the Millionaire Challenge trade of the day. The one thing that we're going to start learning on Monday. And why should you come? Guys, you guys got to see this with your own eyes. You're not going to believe it. In fact, oh man, let me see if I see it. I think I forgot to send it to myself. Let me see something. I want y'all to see something. Because I want y'all to see these. I'm laughing right now because I want y'all to see these numbers because they're obscene. Dang, the numbers aren't there anymore. Oh, yes, they are. Hold on. I'm looking at the wrong thing. Let me pull up silver. I want y'all to see something. Okay, yeah, let me take a picture of this. Y'all ain't gonna believe this. Y'all gonna be like, man, you got to be freaking kidding me, Joel. No, I'm not. Your mouth is about to drop when I show y'all this. Your mouth is about to drop. your mouth is going to drop because you're not going to believe it. You're going to be like, there's nobody making this type of money in one day. And I'm like, watch. Let me show you something. Which is why I got to stop. I got to stop educating and getting back to trading. Which sucks for y'all, but it's going to be great for my family. I got to focus again because this trade right here was the easiest trade of the day. But before you even see what you could have done, I want to show you what, if in a perfect world, I'm going to show you what people did. All right. I want y'all to see this. And I want you to see it with your own eyes. This is not a made up slide. This is how much people made on betting on silver to the downside if you bought this yesterday. This is the percent return. That don't even look real. Do y'all see this? What's the biggest number you see? What's the biggest number you see? I don't know if y'all know this, but if you took $100 and you just go to ChatGPT right now and say, Chat, if I had $100 and that $100 moved up in value 78,000% in one day, can you tell me how much that's worth? Guys, this isn't volume that was bought. This is percent gains. This is percent gained in 24 hours. And y'all don't want to learn this? Are you kidding me? You just scared of money. I want a piece of that. 78,000% in one day. What? Joel, get that off my screen. I know you created that. I'm telling you. That's how much the options were. And it didn't cost $3,000 or $1,000 to buy them. Now, I don't want you guys to focus on that because if you focus on that, you're going to try to hold things overnight. What if I came down the stairs, I didn't have to do slides for my live later, and I rolled in at 9:30, see the market going down, wait 15 minutes, and then get into the market? How much y'all think I could have made? How much y'all think I could have made seeing silver down 20%, rolling in on my computer, the market opens at 9:30, and for 15 minutes, I just sit back like this and then hit sell or buy a put. How much money could I have made? Well, let's see. Could you have done that? Yeah, it's what I teach. This is literally what I teach. This is textbook, what would Joel do? Millionaire Challenge trade. On a Friday. I should have been playing Millie 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 with Lil Wayne earlier. So watch this. I use a 5-minute chart. I'm going to let you guys tell me what to do. I got a 5-minute chart. I'm going to put a 5-minute chart on here. Tell me at 9:30, what color was this chart at 9:30? This Right here is 930. Right here. This is 930 right here. This right here is 930. What color is that? This right here is 930. I know I put that's 930. What color do you guys see? Where is the semicolon? All right, y'all know what it means. That's 930. You see red. I ain't even thinking about going to the upside. Y'all are thinking about going to the upside. I ain't. It's down that much. I'm like, man, today is the day. All you had to do was go into the options market. I want you guys to tell me, dang, the same thing that I just showed you guys on the put side. Instead of looking at the percentages, and it's going to be hard. It's going to be hard not looking at the percentages, because the percentages is it's like, oh my God, these numbers are ridiculous. I got to pull it back up. Hold on. I forgot to leave it up there. I want you guys to tell me which strike had the most volume. And I'm going to tell you guys a secret. Early that morning at 9:35, 9:45, 90% of the time, the one that had the highest volume is going to end up being the one with the highest volume by the end of the day. So I do this every day when I do the Millionaire Challenge trade. We're going to go to my chin. You're going to go all the way down. Tell me which strike, even though that one had a whole bunch too. Dang, that one had the most. Well, tell me which strike had the most volume. Just look at the biggest number. Just tell me the biggest number that you see. What is the biggest number that you see? Yep, you are right, Joe. 95,000 contracts. Now, it didn't have 95,000 contracts early that morning, but it was the one that was sticking out like a sore thumb. Second place is the one that says 87. All right. Now, no one would have believed the one that's at 87, because then you're like, hold up, that means it's about to drop to 75, because it was the 75 strike. Even I was like, man, that's crazy, but you should have bought it. But the 95 strike, oh man, you know what? Anyway, we're going to go with the 87. I forgot at the end of the day on Thinkorswim, the options changed. So I might have to go to the expiration the week out. I can't show you the options expiration was today. So a lot of the times I can't pull it up. So I might have to pull out the next one. But we'll try real quick. But more than likely, I should have taken a picture of it earlier. Dang it. All right. What am I going to do? All right, don't worry about it. Let's see what happens. Let's see what happens. All right. Anyway, let's see what happens. Let me flip over. Get a decent one. Let's see. What time was that? Early this morning. So early this morning, guys, you could have walked in here, guys. You could have said, you could have come into the market at 9:45. Now, this is what I teach. You could have come into the market around 9:45. Now, this is what you do. At 9:45, I want to see green candles. So at 9:45, there was a green candle. Oh, shoot. around 9:45, you would have been able to buy an option for about $70, right around here at the open for $70. For $70. And you came into the market late. You came into the market late. 15 minutes later, everybody already made a gazillion% return on their silver. But you like, I want some of that too. At 9:45, it was $70. It did drop to about 40. That's a big jump. And actually, I don't even think that's 70. I think that's 7. I take that back. That's $7. Is that right? I don't know. My brain's not working today. Whatever the case, we're just going to act like we had 70 in it. All right. And then it went from 7 all the way up to about 24. Now you do the math. 7, 14, 21. That would have been a 280% return. 280% return. 280% return. So that 70 would have been worth, or that $7 would have been worth 24. But let's just make it 70. Would have been worth 240. And you came into the game late. You came into the market late. Why did this pay out this big? I keep telling you guys, on days that you see something up or down a ridiculous amount, that means it's gonna fluctuate a ridiculous amount. So like, let's say you see a company and it's down 40% for the day. It's probably gonna fluctuate between 40% and 33%. Like, it's gonna be a 7 to 10% swing, like all the time. A normal 10% move is already gonna pay out something ridiculous. So the fact that it's already down, that means it's just moving like this. And what you're trying to do is capitalize on one of those big moves. So even though it was down, maybe it was down 28% at that time, maybe by the time you got out, silver was down 35 or 40%. It moved another 8 or 9%. You're trying to capitalize on these moves, and you use the unusual options activity in the market to be able to grab it. Now, I'm not the one to buy a strike. I will buy out of the money or the biggest number if I don't like to do it when it's like a penny. That's why I had a hard time figuring out like the price. Like, I'm normally buying it if it's $100 or $50. When it's like 1 penny or 2 pennies, I'm like, I don't know. You know, I want it to be $10 or more when I buy it. But that's just my personal preference. All right. So I'll just pick the strike that I have a decent number that's on it, and then I'll buy it, and then I'll play it just like this. Now you could have picked 10 or 15 of those strikes, and you would have probably been okay because there was so much volume. Every strike you could have been able to get in and out of, especially if when you have 78,000 contracts, there's no way. I'm not going to say there's no way you couldn't find a buyer or a seller for it, but it's easier to get in and out. All right. Yes, that is the strike chart that I'm showing, Safari. What I did was I actually pulled up the strike for silver. Now, I know I lost a lot of you guys, but I always show the Millionaire Challenge trade of the day. If you had $700, within 2 hours, that $700 was worth $2,400. That's a pretty good come up especially since I am just looking for 100% return. And it did most of the work for you that day. You could have even, let's say you had $100 there, right? And that $100 turned into maybe $300. You could take away 100 and say, all right, I was only looking to make this 100 be worth 200. Let me pocket 100, and then I can play around with 200 now. Okay. So I just want to make sure that you understand kind of what I'm doing when I'm doing my million. These are what you're looking at right now are the fastest moving, highest percent return trades you're ever going to see in your life. You're actually I've never seen anything higher than this. I mean, can you tell me something that pays out 78,000%? I don't even know how to calculate that. A $70,000, that was a 70,000% return, guys. That wasn't how much you made. That was a return. It was obscene. It's something you're never probably going to see like ever. But here's the thing. We see stuff like that all the time. Maybe not every day. It's not every day that you get a commodity like silver that was trading that heavily that dropped 35 or 40%. But there are days where when Broadcom was down, when Oracle was down 20%, when Nvidia was down, when Meta was down that one time last year, there were about 5 or 6 times last year where we saw gains just like this. They happen. They don't happen often, but they happen often enough where you'll see one company or two companies do that a quarter if you have your eyes open. And we all knew it was coming. We just didn't know when. And it made sense for silver to drop on Friday, Friday expiration day. It made perfect sense for it to do what it did today. And I wouldn't be surprised if silver climbs right back up to where it was. For those traders that were holding silver overnight, you'd have made all these gains. Now you want to wait until Monday to see if it drops another 30 or 40%. You probably are about to get your heads ripped off. Because when things move like that, it'll move right back up. Guys, silver can move 40% down and then move 20% up and still be bearish. We call that a dead cat bounce. It can drop 40% and then rise 20% on Monday. And if that happens, for the guys that bought silver today with me, I keep saying it's an investment. I might sell it on Monday. My stock, if it's up 20% on Monday, I might have to get out again. And that's just the nature of the market. The market tells you when and when to get out of things. When things are just ridiculous, you just got to take your profits when you can. All right. All right, let's slow it up now. Let's slow it up. It's 7:20. Let's slow it up. Let's talk about your stocks. And just let me know if you want me to look at your trade as an intraday trade, a medium-term trade, or a long-term trade. And I'll show you guys how I go about analyzing. We already did the short term. I just showed you guys when I want to get in and out the same day, this is what I'm doing. Now, I don't do that in the futures market or if I'm day trading stock, but instead of, well, actually, yes, I do, because I will look at that strike. And then if I wanted to short silver, I could have shorted silver with just pure stock, but I don't want to confuse you guys. Still the same setup, but I could have gone into the silver market with a put. I could have gone into the silver market shorting, or I could have gone into the silver market in the futures market and bet on it going down. I had 3 opportunities to do it. All right. So let's get to you guys' stock. What do you guys want me to look at? Are any of my moderators in here right now? I might have to find it myself, which is fine. Is this DT? I know I got to redo my letters because you guys are doing the right thing and then I can't even read it. That's DTCR? DTCR. I think that's DTCR. If it's not DTCR, let me know. If it's not DTC, it is DTCR? Okay, cool. So let's look at DTCR, and you want to look at it as a long term. All right. So if I was looking at DTCR, the very first thing I want to do, this global data centers, the first thing I want to do when I'm looking up something like this, guys, is I want to look at the mechanics of the company. So I want to make sure I know how big that company is. If it's an index, I don't really need to know how big it is, but I want to know what I'm dealing with, right? So I pull up DTCR. A lot of the times I will go on my chat and ask about that particular company. I'll say, hey, chat, can you tell me a little bit about DTCR? It's going to say, Joel, it's got $1 billion market cap. So it's a baby. So you got $1 billion market cap. So it's 1 billion. For you guys that don't know, that's where you make your money. It's 1 billion in size, 1 billion in market cap. Great. It's 1 billion in market cap. And then I'm going to pull up, I pulled up the wrong chart. I'm going to pull up maybe a day chart or a week chart. So I'm going to pull up a chart, see where it is, and you're going to see that it's $1 billion company. You're going to see that it's bullish. Why is it bullish, Joel? Because look, the 200-day moving average is angled up. The 200-day moving average, guys, is this blue line here. That blue line is angled up. That increases your luck. As an investment, I am not going to buy it right here. I know you guys are like, what? Why wouldn't you buy it, Joel? It's up in the stratosphere. Because look at the patterns. Let's just go back to the patterns of the stock. Let's go all the way back here. Even if I was to put a Fibonacci on here, I'm not going to buy it unless it comes down to about this 50% area. Okay. All right. Once it got down to this blue area, I would buy it. Now, where is it right now? Right now, if I was to see this move from this low, Joel is not buying this nowhere way up here. If I was to buy this stock, I'm going to buy it on sale. Stocks stair step going up. Stocks will stair step. That means it's going to go up. It's probably going to come down. Then it's probably going to go up like that. Okay. So I'm going to wait until it gets until about the $23 area where I might buy it. Okay. I'm not going to buy something. Now, here's the thing. It's a small company. It's $1 billion in size. So that means it's probably going to move. It's a small cap company. It's basically the introduction into the stock world. It's a baby. It's a brand new baby. It might be an old company, but its market cap is brand new. That means this company has room to grow. It has ridiculous room to grow. And if you want to get into data centers, hey, thank you for that, Galaxy. If you want to get into, thank you, Joe Butler, for that. If you want to get into, and this is an ETF, so, you know, $1 billion ETF is still small, but I want to wait until this comes down in price. All right. Even right here, check this out. Even on this move right here, I like to look at the mannerisms of the stock. So even right here, I'm going to show you guys something. Even right here, when this stock started to go up in price, when the stock started to go up in price, look at where it came down to, the 50% area before it started to go higher. So guess what? That's the pattern that it's exhibiting. I'm going to wait for it to do the same thing. Now, some people say, well, Joe, why didn't you just put the Fibonacci right here? And I'm like, you could have done that. If you did that, it is at the 50% area. But there's a short-term fib, and then the longer you go out, the stronger that support area is. I'm going to go here because it looks like the breakout area. And if I do my percent to the low side, if I say, all right, this stock went from $25 to this $22 area, that means it's going to be 10% off. Right now, it's only 4% off from the highs. Joel will not buy anything unless it has at least a minimum of 10% in it. Now, my sweet number, my sweet spot is going to be 20% or more. My super sweet spot is 50%. When a stock gets cut in half and it's bullish, I love it. But I rarely buy things that are 5% down or 10% down. I just won't do it. I can go buy the S&P 500 if that's the case. In fact, that was DTCR. For you guys that didn't know, I'll put it up here so that you guys can see. I forgot to do it. I got to start doing this so that you guys can see it. This was DTCR. Okay. For those that didn't know. So if you want to write that down and look at this company, it looks like the ETF is involved in data centers. Guys, data centers are needed for artificial intelligence. Data centers are needed once quantum computing comes into play. So a lot of companies, especially companies like Oracle, they're heavily investing in data centers. Companies like Broadcom are heavily investing in data centers. Everyone is making their investments into data centers right now because in order for AI to do its thing 5 to 10 years from now, you need data centers across the world. And this ETF looks like it's following it. So it looks like he's making a very, very wise decision on a play for data centers. So that's one that I've learned about today too. So, I'm impressed by that. All right, let's look at QBTS. Talking about, speaking of data centers, if you were looking at QBTS is also a quantum, this is a quantum compute play. This is how I would break it down. This is D-Wave Quantum Computing. My kids own a gang of this stock. Now, the 200-day is angled up. But before we even look at this company, we need to know, is it a small cap company? Is it a baby? Babies are where you make fortunes, guys, because babies grow into adults. Is this a baby company? Is this a adolescent company? Adolescent companies, you can still make a decent amount of money. Or is it an adult? Now you have babies, adolescents, adults, and then you just got old companies. All right. Adults can also make you money, but they're not going to make you rich. Adult companies would be like your Nvidias, your Apples, your Microsofts, your Amazons, your Googles, your Meta. The days of getting rich off of those companies are over. They may grow maybe 10 times their value in the next maybe 15 years. They may grow 10 times. But 10 times, in my opinion, is not going to make you a fortune. The only way you're going to get to $1 million with a 10x is if you have 100,000 invested. But the days of making $1,000 be worth $1 million or $10,000 to $1 million, y'all missed out on that. That's why you need to find companies that are adolescents or babies that can grow into an adult. And then you can ride it out until they're old. And usually when companies get old and they can't grow no more, they start offering these big dividends. They know that people have been in the companies forever. And they're like, instead of selling everything that you have, just keep your stock in this company and we're going to pay you just to not sell your stock and just live off the dividend. And that's what a lot of people have done. You guys are doing it backwards. You're buying dividend stocks instead of growing with these companies until they start offering dividends. See what I'm saying? You want to grow with it. You want to grow with NVIDIA until the day NVIDIA says, all right, I done made you so much money. Don't sell. We're going to offer a 5 or 6% dividend on your 10 million you got in it. Just live off of the 10 million. All right. And then you'll be like, all right, maybe I won't sell. I'll just live off of the dividend. They start growing really slowly, or they just stop growing in general. All right. So QBTS, you guys tell me what is the market cap of QBTS? You guys let me know in the comment section. What is the market cap of D-Wave? And we already know it's a high beta company. We ain't even got to look at it. But what is the market cap? That is very important to me. I actually don't know. I know my sons buy it. I have no idea what the market cap is. Can someone tell me? $7.9 billion. Great. It's now grown. I remember, guys, when it was 1 billion in size. My silly butt didn't buy it. I think my kids did, though. Back late December 25th, guys. Oh my God. What year was this? Are you telling me that D-Wave ran from, this is at Christmas. No. This was Christmas the year before. I was about to say. In Christmas of 2024, do you guys know that this company ran from $3 in size? I'm going to show you guys where it ran from. All of 2025. It ran from $3. We're just going to say $4 in size. It ran from $4 in size all the way to 46. You remember how I told you guys this is nothing but a investing is nothing but a math problem? It's just a math problem. It's just a math problem. It ran from $4 to $45 in 1 year. 10 times your money. This is what you're looking for. And when you get that 10x, you sell. And then you reinvest those funds. You can stay in it, right? You sell some of it, sell half of it. You got 1,000 in QBTS. In 1 year's time, that 1,000 was worth 10,000. You find another company that can grow 10 times its value. You can take your $10,000 to $100,000. I don't want you guys to get afraid of these numbers. That's why I show you big numbers all the time. You guys got to get used to it, and you guys got to go after it. It doesn't mean putting all your eggs in one basket, though. You still got to do it strategically and in a way where it doesn't blow up your account. Now the stock dropped from 4 to 45, and now, guys, guess what? It's cut in half. Remember what I said? Nobody wants to believe it until they see it. Cats come in here all the time crying. That's not true. I've been in this and that forever, and that ain't happened. No, you 17 years old. You ain't been in no stock for 3 years. Like, stop lying. It's always my youngsters that do it too. I love y'all and I want the best for y'all, but y'all need to humble up. and listen to your elders. Okay? You got to listen to the OGs out here in the game. Like sit in the corner and listen to, I get it. You want to go out there, you probably faster than me. You can day trade faster than me. Your eyes are better than me, but I got this. I got this. Listen. Any stock that grows like this, guys, is gonna drop 50% within the next year. You're gonna get a chance to get in. Because stocks move like this, they don't move in a straight line, they move like this. So when they go like this and come down, that's about half that move. Here, half that move, 50%. You can either throw a fib on it and get it when it comes halfway down, or you can just do it by numbers. The easy way for me is just to look at the high and divide it by 2. That's where I'll get in, minimum. Now it's cut in half. Great. If you want to buy it as an investment, I would do it. I would take a chance at it. All right. It's 8 billion in size. It had gotten all the way to 16 billion, guys, and got cut in half to 8. That's fine. Anything around that 10 billion, that means it's still ripe to grow. Maybe now it's going to try to go from 10 billion to 100. It's getting ready for that 5 or 10 year push that everybody's talking about. If quantum is still around, if we haven't invented something, but at least you can position yourself to make money. And if you don't, who cares? I thought Jumia was going to be the biggest freaking gem that nobody ever knew about, guys. Yes, I thought Jumia was going to be it. I was like, you know how big Africa is? This company is only $1 billion in size. And it's the Amazon of Africa. Even if it got to 100 billion, not even a trillion, I'm going to make 100 times my money. 100 billion is nothing. And Jumia did absolutely nothing. It might be running now for all we know. What you think is going to grow ain't always the case. But guess what I did? I invested in multiple Amazons. I invested in the Amazon of China, Alibaba. I invested in the Amazon of Latin America. That's Mercado Libre. I invested in the Amazon of Africa. It was a bust. I invested in the Amazon of America, which is Amazon. I still won 4 times, lost 1, 80% return, 80% winning percentage. And I got out before Alibaba started to tank. So great, 4 out of 5 won. So what? I got a dud. Cool. All right. Let's look at the next one. I don't know if it's going to break trend, but I mean, it might. It might come down even further. It might come down to that lower area. But if you want to take a shot at it, she says as an investment. As a trade, I'm not taking this trade. I'm not taking this trade because I need it. If I was going to trade this, guys, using the what would Joe do method, it's not giving you a chance yet. I don't care about it dropping 50% on a trade. On a trade, all I care about is that QBTS or D-Wave is hitting the 200-day moving average. Well, we don't know how low this is going to go. We don't know how low this is going to go. But I do know that if it breaks through this trend, that means you need upward price movement to break through this trend. That means it has to go higher to go through this trend. That means people have to buy this at 23, 24, and 25 in order for it to bust through here. But if people are like, nah, 21 ain't low enough yet. 20 ain't low enough yet. 19 ain't low enough yet. 18 ain't low enough yet. And then all of a sudden, they're like, anything under 20 is a deal. And then you start seeing it go up 18, 19, 20, 21, 22, 23, 24, 25, 26. You start getting a rush into it. But you can't break through this white line until people decide to buy it at a higher price. I'm going to wait for the frenzy, because I can look at this every day. In fact, I can just sit here and set an alert. I don't even have to watch it. I can say, if anybody decides to buy this higher than $23.50, holler at your boy. Maybe I'll buy it too, but not until then, because what we do is we try to buy this. We try to time this. I see that it's touching the 200-day. I get that. As an investment, if you're buying it month to month, if you're using the leatherback turtle method, then this doesn't even matter. You got it on sale, 50% off. Just keep buying it over and over and over again. I'm talking to my traders that need to make money fast. You can't afford for it to go down. Joel, I got a 3-week option on this bad boy. If you can buy options on it, I don't know if you can. Then I'm going to wait for it to go up. I'm not going to trust the fact that it's sitting there or trust a support area. Just not going to. I'll buy it when it starts to go up. All right. What's the next stock? I know we spent a lot of time there, but I'm going through the process of breaking down these particular companies. I can put it in a long-term investment portfolio because it's small. It's still a baby that can grow to 100 billion. Guys, quantum is attached to AI. AI, you remember yesterday when I showed you guys what were the top 10 sectors? Information technology and AI was number 1. This is considered a grade A in the number 1 sector that's hot right now. Now, can this sector go bad? Yes. All right. Real Dookie wants to see the Qs on a 1-minute chart intraday this morning. All right. So if you were to look at the Qs, he's going straight intraday trading, guys. Now, here's the thing. If I trade something like this on a 1-minute chart, I know you guys are going to be like, what? A 1-minute chart, guys, is only going to show 10-minute trends. So unless you're going to be in something for 10 minutes, for 10 candles, that's the only reason why you guys should use the 1 minute. I know a lot of you guys that use the 1 minute for entries on something that's 2 or 3 hours long. And I'm not saying you, Real Dookie. I'm just saying a lot of you guys, in my opinion, are using the wrong charts for the strategies that you are using. So we're looking at the Qs, and we're looking at the Qs on a 1-minute chart. All right. We're looking at the Qs on a 1-minute chart. So this is a day trade if it ain't one. This is a pure day trade. Now, let me look at this. I'm gonna pull up my 5-minute chart, and I'm just gonna change it to a 1 minute so I can at least have all of my tools on here. So if I was using this 1-minute chart, and you said 1-minute chart, dang, I didn't see what it said. It said 1-minute chart on the Qs, and I didn't see the second part. I'm just gonna go to 9:30 and see what we saw. So at 9:30 this morning, if you were trading with my tools, everyone in here tell me at 9:30, because this is the 9:30 candle, what, I know you see the rest of it. I don't want you guys to see all of it, but early this morning, this is what you should have seen. At 9:35 this morning, guys, the candles were red and this yellow line was angled down. I would have only wanted to be short this morning. Period. But You only want to be in a trade for 10 minutes. So unless you're trading 10 minutes, 10 minutes here, 10 minutes there, 10 minutes here, 10 minutes there, I wouldn't choose this chart. But if I was to get in at 9:45, I would have taken this short right here. And I would have taken this short. I would have been in somewhere right around here. Why? Because, guys, if it's going down, I want to go down. And when it goes red, I want to go down. You see how it's red there and red right here? Once it started to go red, I would want to go down for about, 10 candles. 1, 2, 3, 4, 5. And then it kind of went sideways. I would have been out of here for a break even. And then it started to drop. Really didn't do anything. Kind of just went sideways. All right. It went from 626.5 to 625.5. Now, if I was day trading this, people say, Joel, could you have made money on this? Well, for one, when you're using a 1 minute chart, guys, you want to see how much the Qs move on a daily basis. On a daily basis, the Qs move about $9 in the options market. So let's just go backwards. Let's go backwards. Let's go back to the beginning of the day. At the beginning of the day, you're going to see that there was a high way up here, right? So this high right here was 630. Now, you know that we were short. Why were we betting on it going down? Because the minute you opened up at 9:30, 9:45, everything was going down. This is where a lot of you guys get confused. This 630 is important. That means that's what price Qs was. It was $630 at the highs of the day before. If I know that the Qs move $8, the Qs moves $8. How did I find that value? It's over here on the left. You guys can't see it. The average true range of the Qs is $8. It's $8. That means 622 was going to be the area that it was probably dropping down to. Do you guys see what price we closed today at? We closed today at 622. You had the cheat sheet before you even started the day. 630 was the highs. Qs moves 8 points. 630 minus 8, 622. So at 9:45, the only thing I'm thinking about is, do I have enough room to make money from 627 to 622? I know I'm going to make $5 to the downside if I'm betting it to the downside. It hit 622 right around. There we go. Right around 12 o'clock. What do I teach you guys? Why do I trade from 9:30 or 9:45 to 12? Because there's only 2 trading periods. It's the 9:45 to about 11:30 period. Then there's the everybody lose money period. The everybody loses money period is from 12 to 2. Anyone that trades during that time is going to lose their money. Then the market picks up again from 2 to 4. I don't trade the 12 to 2 market. I go to the golf course. For that reason. At 12 o'clock, it moved its full 8 points. I knew to be short because the market told me to go short. At 9:45, the 20-day moving average was angled down. Now, that was the 1 minute chart. I don't even know what my 5 minute chart showed. If I was trading this, I probably would have used a 5 minute. I'm looking at your 1 minute, and your 1 minute still told me to go short. But my 5 minute I'm kind of curious to see what my 5 minute would have showed. My 5 minute, which is why I tell people to use the 5 minute, was red, 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 red. Ain't no question what direction to go in. Do y'all see that? Do you see any green in that chart? Any green? Which is why I'm trying to convert you 1 minute chart traders to 5. In my opinion, it is the best because it's going to slow it down for you. That 1 minute chart is just too fast. I did the same thing. It's fun. You get to see I want to see every tick because I'm fast enough to do it. The market is not as fast as you are. You're too fast for the market. I don't know if any of you guys think like that. Think of it that way. Don't think of it as there's something wrong with you. Think of it as you are just faster than the market. You're better than the market. So slow up just a little bit so that you can keep up with the slowness of the market, because all it did was methodically go down all day. It was a very easy short. Red, 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 not a green candle till probably, all right, well, it started to go up kind of at 12 o'clock. And even then, even though I hate trading this period, it started to go up at 11:30. Okay. But that 1 minute chart, you should only be looking for 5 to 10 minute trades. And if that's your thing, 10-minute trades, then great. But if you're trying to make 2 hour or 3 hour trades and you're using the 1 minute, I fault the educators that are out there teaching it. They're teaching you to look at a higher time frame, then look at another time frame, and then look at the 1 minute. And the reason why they're doing it, it's not their fault. They don't know about trending indicators yet. Trending indicators is the reason why I don't flip back and forth no more, because it's telling me the trend. Most of us are using the upper time frame to figure out the trend of the market. So that's why you're flipping back and forth. But going back and forth is just time consuming. But when you have a trending indicator, you don't have to worry about that. You can just sit back with one chart and just chill and let the market tell you what to do. And if you have the ATR in place and you know how much it moves on a daily basis, you know what it's going down to. In fact, you had the ATR that told you that it was going to drop 8 points from the highs, but then you got the options market to also kind of tell you where it's going to. And if you go into the options market and you look at the Qs, if it's still up, it might not be up, because I can actually go to the next week. I can go to the 7th or the 6th and see what the puts were sitting at. And the puts, the most volume was being bought at the 620 level. Okay. 620 and 620. So it actually went lower than I thought it was going to go. And so, in fact, you could have probably rode it all the way to the 620 level. 622 being the area that you thought it could go to because of the subtraction of the 630 from the 8 that put it at 622. But then when you go and you look in the options market and you see everybody and their mama buying the 620 strike, then you can probably squeeze out another $2. Now, there's a lot of people that are shorting this with actual cash. So that's why I'm not saying you can still look at the strike and still trade this with $25,000 and short it if you want to. Because there are people out there with 100 grand or $1 million and they're trading. Dang, I'm looking at silver. I'm looking at the wrong one. Sorry about that. I thought this was the Qs. Yeah, let's look at this. Oh, it's still the same thing. Oh, it's still the same thing, 620. All right, it's still 620. I thought I was looking at the wrong thing. I don't know how silver popped up on my page. Anyway, all right, hopefully you guys understand that. All right, any other stock We still got a little bit of time. I got time to do one or two more. Yes, Safari Don. I put, what's that video, that commercial where she's like, I put that shit on everything. I put the TTM trend on everything. There is not a chart that the TTM trend or the, if it's not the TTM trend, then I have the Heikin Ashi candles on the chart. All right. All right, we're going to look at AZN. Now, I don't see what we're looking at AZN for, so I'm just going to treat it like a investment. So if I was looking at AZN, guys, is Joel going to buy AZN as a long-term investment at this price right here? Put in the comment section, will Joel be buying AZN at $92 if the highs were $96? Would Joel be buying this? No. Why? Because it's gonna come down in price. In fact, it's probably gonna come down to this trend line right here, which is what it's bouncing off of right now. If I wanted to buy this as an investment, first of all, can y'all tell me I don't have time to look? Yes, I do. I got time to look it up. AZN is, dang, its market cap is, oh, that's AstraZeneca? I did not know that. It's $287 billion in size. That is huge with a 1.5 beta. So guys, this bad boy moves with a 1.5 beta. It's not if this thing's gonna drop 15%, it's when. It's gonna drop 15%. So you can use the magic tool that I have here, and you can say, all right, if the highs were 96, if I wanted to buy this 15% off, I can literally go down here and look at where 15% is. 15% is going to put me somewhere in the 82 range. Can it drop to 82? Maybe not. Let's say it doesn't drop to 82. This is why you don't just buy things here just to be buying it. Now, you can buy it if you want it as an investment. Remember, guys, when it comes to putting funds in it and buying it long term, I don't want you guys to be like, I ain't buying nothing because ain't nothing 20% off. You can still buy some now and then buy some later and then buy some more after that, right? You can use it as a placeholder in your account. I do that a lot. Sometimes I'll buy one share just to hold its place in my portfolio. I did that with silver. I held the place. Then I went heavily in it back in May and June. Then I sold all of it and kept that placeholder with one share. And then I just recently bought a lot of those shares back. I didn't buy the full amount, but I bought enough. And if silver drops 50% from where it is right now, I'll buy more for the long run. But AZN could possibly go down a little bit lower. Now, AstraZeneca, if you look at this chart, it's been riding this trend line for a minute. But I'm still not going to buy it at 92. If I was going to buy it, I would have bought it here at 88. I missed that move. So guess what? I'm going to be patient. Because if it's riding this trend and we're sitting at 92 right now, it will probably just go up in price. Let's say it goes up in price and it goes, let's say it hits a new high. Let's say it goes up here and then it comes back down to this line right here. Y'all know where that line is? That line is sitting at about $93. I'll buy it $1 higher than we are right now. So just wait. And then it'll probably go higher. You see that? I don't have to sit there and buy it there because I'm going to miss it. But if you want to buy it as a placeholder, that's fine. you know? Cool. All right, I got time for one more. But it does look good for those that are in it. I'm not going to buy it that high, but it does look like it has some short-term pain. You see that 513 cross to the downside? It may come back down to this 88 area. Short term. And I mean, when you got all-time highs sitting right here, you get this in stocks. Like people are taking profits. All right. ETN on a swing trade. All right, cool. Let's see how big ETN is. That's not it. Eaton Core. What is the market cap of ETN? If somebody can put it in the comment section. What is the market cap? And I need the beta. What is the market cap and what is the beta of ETN? While I'm pulling up the charts, please tell me the market cap and the beta. And I need to know, guys, is this company bullish or bearish? Is this company bullish or bearish? No market cap? No market cap of ETN? Nobody has the market cap of ETN or the beta? I got to do it myself. All right, I'll do it. Y'all know I can do it in 20 seconds. ETN has a market cap of 130 billion. So it's 130 billion in size. So you're dealing with like an adolescent. You're dealing with like maybe a 20-year-old. 136 billion in size. You know, can it? I mean, it would have to be $1 trillion company in order for you to get 10 times your money. So I don't know if it's gonna give me 10 times the value. I don't know. I gotta look at it. But he asked, or she asked, I didn't see, as a swing trade. As a swing trade, I'm gonna be honest with you, you're a little late. It depends on how long that swing trade is. If I was using a day chart, I guess you could say you're a little, I'll take that back. If it broke this trend, it could be going to another 3-day, 10-day trend. But if you notice over here, the stock, when it moves for about 6 or 7 days. You see how it trended here to about here. That was about a 6-day run. Then it went down in price. Now it's going up. You could be in a uptrend for about another 6 to 10 days. But if you're looking for a longer swing trade, I'm going to look at the week chart. If you're talking about a couple of months, in this stock, and I looked at the overall view of ETN, what do you guys see? It's still a bullish company, so you definitely want to buy it when it starts to go bullish to the upside. All right, and we're looking at ETN. And, you know, just looking at the chart, you're seeing how it kind of moves. When it does move, guys, it moves for about 6, 9, 10 weeks. It's $350 right now. So from the highs, the stock is down about 17%. And it's holding, you know, this trend line. You know, as long as it's holding this particular channel, you should be okay. It looks like you're getting higher highs. So I would say a swing trade that is like 10 to 14 days, you're late. But if you're looking for a couple of months, you're early. So yes, this thing can move to the upside, but if you have a short-term option on it, you might lose on it before it starts to go higher. Does that make sense? Because the day chart, is for my 10 to 14 day trades. And my week chart is for my 10-week trades, which are like 2, 3, 4 months. So I don't know how long that swing trade actually is. But I break it down depending on what chart I'm looking at. I know you say it looks bearish, but the charts are showing green. This is showing green, and this is showing green. Like, I don't know what bearishness you see, but that looks bullish. That's green. That trending indicator is telling you it's going to the upside. And I'm gonna show you something else. You have a higher high. This high right here is higher than this high. That's higher than this high. That's higher than this high. That's bullish activity. Okay, the 200-day is also angled up. So this might be turning around. Even on the week chart, it looks like it's moving to the upside. Now, if it breaks below 330, it changes all your charts. It changes all your charts. Okay. Cool. That's why I love trending indicators, because I get confused also. If the trending indicators weren't there, I would be seeing something different. But the trending indicators with the green and the red, it's going to really, really make the screen pop and help me with the direction that I need to go in. All right. So cool. I am going to probably do a live tomorrow. I'll probably go live tomorrow. I'll probably do something like realistic expectations tomorrow. We talk about percentages, like, how much do I risk on a swing trade? How much do I risk in an option? How much do I risk on a futures trade? When do I know when to get out? Because you guys need that, especially when you're doing these short-term challenges or long terms. A lot of you guys are sitting in stocks for too long for no reason. No one in here should be sitting in a stock that's 50% down. First of all, you should have been buying it 20% off anyway. So if you 50% down after buying it 20% off, then we need to talk about your entries and why you're still in those terrible companies. And it's probably a bearish company now. Just get out of it, lick your wounds, and re-enter in some of these winners. All right. Don't take it personally. The market does what it wants to do when it wants to do it. If I had to count how many times, like, I am lucky enough to get great moves in stocks, but that's because I'm diversified into lots of different companies. I give myself a chance to get lucky. And then every now and then one of them will run so much it makes enough profit where it doesn't even matter what the other companies do. And that's what you want to do, which is why you shouldn't be so consolidated in one company. When you're investing, guys, the numbers that the professionals are going to tell you to use is 5 or more. 5, no more than 20. 5 minimum. 5 is going to give you the diversification you need. They need to be in 5 different areas. Even if it's like Bitcoin, Amazon, a bank stock, a restaurant stock, a retail company, or an oil company. Diversify yourself. All right. That's going to protect you guys in case one sector decides to act a fool. Oil has been acting a fool lately, but AI has been going through the roof, and the other commodity has been going through the roof. So even when you have one sector that's failing, you got another sector that's doing okay. There are going to be times, guys, a trade that looks perfect on paper. When you take that trade, Trump might come out and just put out a tweet just because it's a Tuesday and mess up your whole trade. You can't take it personally, and you're not going to be able to find the answer in another chart. There is no chart that shows or that's immune to a Trump tweet. You just got to lick your wounds, get out, and then re-enter that trade or investment. All right. So, I'll see you guys tomorrow at 6 o'clock. I'll see you guys tomorrow at 6 o'clock. The Millionaire Challenge is 3 ways I want you guys to focus. That's what the moral of the story was today. 3 ways. I want you guys to slowly start setting yourself up in 3 ways to get this bag. 3. Short term, you got to learn it. Medium and long. Long is already set up for most of us. Now you got to set up maybe that Robin account or that Thinkorswim account. Learn these charts so that you guys can do the leatherback turtle method, where you're buying consistently on the 1st of every month, no matter what the market's doing. And then on your day offs, have an account that you play with. Man, I'm not doing anything. Let me go day trade the market and see what's going on. Even if it's buying 1 share of something and then selling it, 2 or 3, even if you make $5 off of it. My aunt, she was so excited. She bought Bitcoin for the first time. And she bought Bitcoin, and it was before it dropped where it is right now. She bought it, I think, in the high. I don't want to put it out there, but she was up 4 or 5% the next day. That was exciting for her. Right? Now, I don't know if she sold it that day. I think it was an investment, but it's getting you into the habit of buying things and knowing, hey, it's okay. And the more that you diversify yourself, if you're in a silver that drops 40% in one day, it really shouldn't have affected your account that much. Now, if it is one of the 5 companies that you're in, it hurts. If you bought it in the 113 range, but if you've been in this room, you would have learned that's not where you should be buying it. We all knew it was gonna drop at least 50% at some point in the next year. It just so happened to happen in one day. Jeez Louise. And I caught some of it in the low 70s. All right, I could have sold it, but I'm now re-entering that position as an investment. What I should have done, I'm not going to say what I should have done in the first place. Silver ran too fast. When I bought it back in June, I did not expect to be up 200% in 7 or 8 months. Silver has never run that fast ever. Well, I take that back. It was one other time that it did it. They said like 200 years ago or something like that. So it was going to fall in price. So I took my profits when it started to run, and I just rebought silver at a lower price than I sold it, a couple of months back. Now, it wasn't even a couple of months, maybe a month back. And I'm satisfied with it. And I'm satisfied if silver drops to $50. I'm satisfied with it because I was putting silver in my portfolio so that it can be diversified. It just ran too fast. I had to sell it. The market said, Joe, come on now, buddy. You've been in this game for 10 years. You and I both know silver ain't supposed to be up here in this 113, 115 range. Sell some, silly. You could always come back and buy more because the minute it doubled in price, you knew it was going to drop to at least $60 at some point. Now, I probably caught it a little bit higher than I wanted to, but I am satisfied with buying it in the low 70s after selling it higher than that. I'm good. I'm Gucci. I got all of those profits sitting in my portfolio still. I am good. But that's how you guys got to approach the market sometimes. All right, let me get on out of here. I'm 15 minutes over. I'm supposed to be doing quality time. So we're going to keep the same Eminem theme. For those that are in here, please make sure that you guys take care of that top 10 that's over there. I appreciate it. Lisa, Safari Don, Mrs. Dante, Undercover Organizer, James, Kale, Dr. Harrison, Ann Barrera, Krista Agami. Thank you. Thank you for the support. I want you guys to always make sure that you take care of that top 10 that's over there. Thank you guys for helping me get close to reaching my goal. During this song, at the end of the session, I always let people engage with each other. You get a